Right. Hello, hello, hello. I mean, if you guys can hear me okay. Looks like it's coming through. Um, I think it's coming through. I think it's coming through. Um, all right. So starting off today, fill you guys in on the, I don't want to say drama, but my kids, I told you yesterday, the kids are starting school today. The one of them, he's like, no, Dad, he's like, I want you to take me. I'm like, okay. All right. I was like, I could do that. So like I had to meet them this morning and, the other one was like, no, I want mommy to drop me off. I'm like, guys, you're like seventh grade. So that was the drama. New school, new anxieties, but they survived. We'll see how it goes at the end of the day. Um, yeah, the fun and excitement of little kids. Anyway, yeah, the girl was good. So at least I have, there's hope for her yet. And yeah, fun. Anyway, last 24 hours in the markets, rather tame, right? We had some interesting data come in this morning, the CPI. Not crazy, right? I would say being up 0.3 versus the 0.2 for the Swiss. It's all right. It's all right. I don't know. It shows that it was building. They expected it to build. We'll see kind of where that goes. We know that the European market is a little bit weird right now, right? Weird in the sense that a lot going on, right? A lot going on. Like I said, Germany, I think, is messing up a lot of, I don't know. I don't want to say planning. Not really planning, but a lot of the planning, for lack of a better word. Oh, God, I lost the window. What did I do with it? Hold on one sec. I got to put this over here. Hold on. There we go. I'm like losing all the things here. Anyway, so again, seeing it kind of creep up after we've seen raises, obviously something to worry about. There's actually some data here about the RBA is risking crashing the entire economy with rapid hikes. And again, this is all of them are trying to not send it into a recession and crash it with the hikes. That's kind of the game that everybody's playing. So it's always nice when Bloomberg's like, yeah, this is what the analysts are warning about. It's like, yes, that's kind of what everybody's talking about right now. So. The other big news today, and again, we're not really necessarily seeing it here so far. Basically, I guess with Apple, this morning they were all in a blaze about iPhone 14 and what it's going to look like, and the release, and then they were talking about the lockdown. There's a new lockdown in China right now that is locking down one of the production cities. And they mentioned how they're already starting to send some production to India earlier than expected. It's like, oh, okay, so. That's something we're not really quite seeing yet in the markets. And I would say right now the trend is kind of what we've seen lately. A little bit of dollar strength across the board again versus the euro. 20 in 24 hours is nothing big. 46 in the pound dollar, nothing big. 72 in the yen is pretty decent, right? Swiss 14, that's nothing, especially with the Swiss number coming out. Dollar CAD, again, you know why? Aussie dollar 39, again, half of an ATR. Pound dollar up just 15, not too much, a little bit, all right. And then again, pound yen 21. 21 is nothing. So overall, not horribly bad. The unemployment claims came in. Again, seeing these green numbers in here, less than expected. That is, again, back on that. That's it. Raise the dollar. Again, the demand destruction for this week. It's funny. One week we have one story. The next week we have the next. Last week it was like, yep, everything's working. We should probably slow down. Right? This week it's, hey, the JOLTS numbers, not only were we wrong last time, they were much higher than expected. They're even higher this time, right? Not good. Again, more reason to raise. And then again, seeing unemployment claims down, kind of the same thing, right? The economy is not being hurt that bad. And meanwhile, everybody over in the housing group is kind of like, oh, God, what do we do? Right? What do we do? So, yeah. It is what it is. We'll see what the manufacturing number comes in as. Again, manufacturing, they're expecting to be a little bit lower. Not much. 0.7 is not too much in that one. Remember, again, if you're not familiar with these, and again, they get confusing. It's services and manufacturing and PMI, and who's am I doing? Doesn't matter. The big thing to worry about is the 50 number. Just understand in a lot of these releases, the 50 means expansion, below is contraction. The 52 technically means we're expanding slightly, but we know that we have negative GDPs and things. I saw... on a worldly basis as well. Who was it? not Fitch, the ratings people. Anyway, basically showing that we have negative world GDP right now with inflation. So, again, could there be a surprise in this one? Sure, there could be. I don't know if we can. I mean, it's possible that we drop below into like a 49.8 or something like that. And again, that kind of throws kind of a reversal a little bit for today. But again, if this number comes in higher than expected, 52.5, 53, all of those are more dollar strength type tools today that the Fed is going to continue to raise and continue to kind of maintain course, which I think is what is absolutely necessary. Now going into tomorrow, obviously we know we got non-farm tomorrow. It's first Friday of the month. It'll be September 2nd. Going into a holiday weekend. So going into the holiday weekend always does make it a little bit weird, but after the last 4 days that we've had, this could really be the cap on the week. I mean, the unemployment rate, we heard the Fed say, listen, we need to get up to 4.6. It's at 3.5 right now. If we see it not moving at all, that means, hey, listen, we know that there's still a ton of job openings. We know that less people are claiming unemployment. The unemployment rate's not changing. Basically, that's all the signs they need to say, okay, we're going to continue to raise because it's not having the effect. It's kicking in slower than expected. So, and again, the scary part is the average hourly earnings dropping a little bit. But again, the ADP number was a big miss, right? If we looked at the ADP number on Wednesday, right, they expected 300, but it only came in 132. The expectation tomorrow is, again, right around that 300 total. And again, they are kind of different subsets, right? It's ADPs, checks versus, everybody. If it doesn't have a big miss, if it comes in as expected, again, everybody's expecting the miss right now. Again, that is a strong dollar weakness or a strong dollar based, data release point. So with that, knowing that tomorrow morning, again, this is at 8:30 before we'll talk. If it looks like it's going to be a strong number, if it even comes in just as expected, because everybody's expecting the bad one, again, that's kind of not leading us to that Feel Good Friday. That's kind of leading us to a red week, right? I know earlier this morning, that's, what they were talking about was, this morning, the first day of September is kind of looking like the last few days of August. Excuse me. I think this is, right now, based off of their projections, to me, this is more of a recipe for ending the week on a red. So, and because of that, we may see, today may be a little bit different. Today may be a day where we start to see that slow down in a little bit different of a sense. All right. So just keep that on the radar, knowing that tomorrow is a big day, knowing that if these forecasts come in, that is every reason why that the Fed should continue its path. And with continuing that path, that leads to a little bit more destruction inside of the overall indices market. All right. So let's dive into charts. So dollar, you can see dollar starting to raise back up again, right? You're seeing some of the data points come in today. You're like, yep. They're unemployment claims, not bad. Great. That's every reason why the Fed needs to continue to raise. And you're seeing, the response off of it. Now the dollar, and again, I'll kind of steal some of these from prior levels, right? You can see the dollar is kind of approaching levels up here at 109.50. Again, definitely high. I mean, we talk about 109 being high. And yesterday we talked about a push down. And like 12 o'clock, it started to reverse back up. And then the Europeans sent it back down again. And then at 5:30, it reversed again. So again, very whipsawing backing forth. But the data is now justifying that move right now. Will we see a reversal today? Probably maybe a little bit. But I wouldn't say that it's as strong as normal just because, with non-farm tomorrow and the data not looking horrible for non-farm, it's kind of one of those things. It's like, will we see an absolutely horrible? I really don't know. I feel like it's not going to be as bad as kind of what the forecast and what the thinking is. All right. What was I going to do on this one? Oh, hold on. Okay, 10 to 11. Okay. What? Melissa's job is interesting. Melissa's on the fund committee at work. Okay. She's like 12:30 to 1. I have a fund committee meeting. I'm like, what? All right, so we're gonna get the little guy in a little bit. Hopefully, he is behaving with today. All right, so anyway, we know a dollar's up in an area where we could see some reversing, and I wouldn't actually be surprised if we do pull back into the 109 level. Reason why. is with non-farm tomorrow. I think if non-farm comes in exactly as expected, those are all the ingredients the Fed needs to say, we're staying the course. Look, all the data justifies it. And again, they said that demand destruction was the number one thing. JOLTS was the number one thing that they were looking at. We know that inflation is continuing to rise. JOLTS data remaining high, unemployment remaining low, the unemployment rate staying at 3.5, super, super low. Those are all reasons why they need to increase it, at the same rate that we are, because they said they need to get that to 4.6 before the market equalizes. And that's why we're seeing all the red over here. All right. So Aussie dollar. All right. So Aussie dollar. All right. So we ended up slamming through. And yesterday we talked about this level a bit, right? We talked about how, again, we probably see a little bit of reversal. You can see it did. It reversed back at about 10:30, went right back up to that 23.6, and then the trend just continued. We got a lot of chopping through here. And again, chop, 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 chop. And it's like, well, this is a sign. There's the basing in. It's like, oh, just go. And it did. It didn't give us quite the Harry Potter, but when it starts to chop through that much and starts the base in here, you don't always get the confirmation. It did just give us kind of a hit right now to kind of push us to the downside. That would have been like a European session hit. I don't think it made it to a 1-3 though from that European move. That's on 1-3. Is there? Actually, it did hit. Look at that. It did. It actually, the 1-3 did come off of that one. So if you would have treated this like a Harry Potter, you still would have got out of the trade to the downside. Profit-wise on this one, I would have said, this is probably where we're going to see the bounce. So it did kind of qualify for it. I didn't trade this one. Again, I was not awake at 4 o'clock this morning, I'm happy to say, thankfully. But it did push down. So at this point, we can kind of extend both these down and see... Let's bring in the 50 to an interesting level there, and then here's the more recent. Yeah, look how the 61.8 just sudden. Again, if this turns out to be the bottom, the 50, there's probably something there, seeing all the running here. But look at that, the level we marked off yesterday that was the 50. Now it's lining up to the 61.8, and that second level, look at that, just happens to bracket off on the 61.8 and the 78.6. So if this is the new bottom, we do have some levels over here where we could start looking for shorts. And again, going into non-farm tomorrow, I'm looking more for like the short because I think the data will justify it. More of a push to the downside than anything else. It's just, this would be a lot of the kind of dollar destruction up just to get that to turn and reverse. So yeah, not a horrible trade right now. I would say look for this to come down, look to find a base, and if we can find a decent base in here, and I don't want to use this as the base, but this may be kind of where we are kind of looking for it right now. Any good level of base, we need to mark off for anticipation of news tomorrow. All right. Yeah, the fund committee. Yep, there she's on the fund committee. Yeah, well, sure. Her shows. I mentioned it to you guys in the past. She works for an advisory firm that is. Basically, I think I think they have like an office address, but it's like the main guy's house. Everybody's remote. So they do a lot of like online fun events. Like she got like brownies. They were making brownies. I don't know if they're making brownies. I guess they're not. She hasn't made it yet. They're downstairs. I guess it's a brownie eating thing. At the holiday time, they got gingerbread houses and they were all going to build gingerbread houses like, virtually. So that's what companies do now, right? You don't rent office space, so what do? You send everybody gingerbread houses, and you do a Zoom session where everybody builds gingerbread houses. So, yeah. So we're doing it wrong, guys. We're all doing it wrong. All right? We should be doing live streaming gingerbread houses together. Anyway, I'd look for this one to kind of continue to move down. I'd look for a retracement in the overnight. But again, this is the level we talked about yesterday. We know looking below this, kind of where price is right now, right? We know right now we're kind of flirting in this area. There's a few small levels in here, but nothing that really stands out that it's like, ooh, that's a major level. I guess probably actually this one here is probably not bad. There's a touch off of that one. That may be where the next reversal is, but then after that, it should be a decent drop. And again, from this old draw, you can see 786 is kind of, that's what we're running into right now. But that's what we're about to run into. That's what this last hit went off of. So you can see it right there. I'd say see what it does there. If we can break through that, let's see. It's about 30 more down. It's a lot of dollar strength before non-farm. We got 40 minutes. Whoops. Didn't want to put notes in there. So this is number 2. So there is a potential long off this. Yeah, actually, it wouldn't be that one. Again, this profit target's still fine. We can take it off. We don't need it at this point. Actually, we get a bounce off this. If we hit this at the right time, I think this could be a potential bounce in preparation for tomorrow. Oops, not that. God, what did I do? This, there we go. There we go. I was like, man, what is it doing? What is it doing? 69, I'd say, I'm sorry, not 69, 67.95. 67.95 could be a decent roll, particularly at 10:30 today, and that would kind of go in line with what we're expecting for tomorrow. A bit of a move for reversal into non-farm tomorrow. Yeah, it's not bad. AUSSIEN. So we talked about a bounce off this level. You can see actually we tagged it at what, midnight last night. You know, we had our 1, our 2, our 3, our 4, and ended up hitting 5 times before kind of hitting. It didn't push all the way back up to the 23.6 though. Actually, the 23 from the top. Kind of got stuck, right? Kind of got stuck. There is a level there. I wonder if we're going to need to use that one. It is right at the 52. What? Yeah, just put them on the floor. Or not. Buddy, here, you want to do chart school today? Here, you want to do chart school? You say ba? You say ba to everybody? You say ba? No, you pissed. You want mommy. Oh. All right, so we'll have to get used to the adjustment here. 1 second, guys. Here. What's this? Oh, you're so tired. It's morning nap time? Yeah. All right. That didn't take long. All right. So, so sitting right around this 95.60, 95.50th level, it is now, if you look at the most recent high to low, it is right around 50. There is kind of, a nice drop, a pullback, and a nice push down, and a test, although it did push the test kind of a little far in there. So, we're kind of in between those two levels. I'd watch it. Again, we talked about this level being the 50, and again, it didn't leave great. It was a very fast strike down again at midnight and literally just came right back up again. So it's there. It wasn't the biggest mover. It was only about 30 pips off of that one. Watch it again. The more times we crunch through, I think we got to, we're probably due to push a little bit lower, but none of the levels down there really excite me or anything. But I think right now, look out for this level. If we do push back up, this would be more for a short. And again, if we can pull back up there in time for tomorrow, again, we got plenty of time. I mean, it's about a 50-pip mover, though, back up. If we can get up to the 95, actually, this should have been green, not red, but if we can get back up to that 95.50 level, that would be an area where I'd be looking to take this one short as well. And that could be a yen proxy play. It's funny, this is like the only one that is, look at that, only one that is agreed, minus the dollar pairs. So, yeah, so it took the bounce. It did do the 50, but didn't really leave. It's still in the same channel that we were in yesterday morning. Not necessarily enough movement in this one. Trade. Euro dollar pulling back down again. Now, we are close to this yesterday. We talked about, and it looks like we hit it at 10:30 is the green, right? Yeah. We're super close. This one missed by 1.6. 1.6 at 11 o'clock. Yeah, did you like this one? You like this one? Yeah. Yeah, we missed this by just a little bit, buddy, right? We were so close. Yeah, we were so close. Missed it by just a little bit. Anyway, rolled all the way back down, got back down to 1. Now we are in this Harry Potter scenario right here. And again, this is kind of the same thing, seeing a lot of dollar strength come in. There is a push down on this one. We were looking for kind of a reversal. But again, Europeans, where I'd be cautious with this one is, there's your 530 reversal, right? Actually, I guess, hold on. Let's take this. 3 o'clock is here. There's the European market. 530 is right there. So again, up, 530, reversal right back down again. And actually, it wasn't a level. Right? What do you see? What do you see? What do you see? Yeah, I don't know what means. I don't speak I don't speak Oh, like this one? Boom, 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 boom. Here. Here. How about this? Here, get this. There. You good with that? Yeah, you're happy? Yeah. So I'd look for a little bit of basing in here just to give us a confirmation at 10:30. We'll find out whether we hold or if it's going to be another bounce. A break at 99.73. Look for this one to push all the way down to a profit target of 99.29 or 99.30. All right, 99.30 could be the area, and it's a little bit low. I know this one is probably not straight. Yeah, it's not straight. It needs to go to 38. There you go. Now it's straight. What? What are you doing here? You want this? This? That's what you want. Or you want this? You want this? How about this one? You want this one? Here, take this. There you go. Whoops. Here. There you go. Good. All right, so this is the same setup we talked about yesterday. So again, you can see parity obviously being, a magna point. 99.80 is where we're at right now. This is the break we covered yesterday. So again, nice little reversal this morning. Looking like it's gonna kind of, again, we want the basing right here to drop lower. So not much different from yesterday. Euro pound. So these are the levels we drew yesterday for euro pound. You can see, look at this. It fought. It smashed into this thing multiple times, started the base into there again. It hit it again, finally broke out of the top, and then was like, oh God, we're so exhausted, and pulled all the way back down again. So look at the fight that put on. Unfortunately, didn't get the entry up top. A decent push here. Really, where we are with this one is, I wouldn't be surprised if we start basing in this level. You can see that it found buyers here, and you're like, wait, why are there buyers? It's because those were old sellers, and they got sliced through. It was a violated level. It came back up supported, and then came back down and supported again. We're probably looking for a break and a push back down. I wouldn't be surprised if we get back down to the 86. It's only 26 pips of the downside, but the euro pound has not really been giving us amazing results. You can see right now in 24 hours, it's given a total of 10 pips worth of movement. So it did spike up, and again, a decent spike from that level. It was about 40 up and then 40 back down again, but it was very, very short-lived, right? Very, very short-lived. What are you doing, buddy? What? What? Here, what else do you want to play with? You want to play with, here, you want to play with this? Here, this is actually a baby toy. You want to play with this? What's this? Is this your cow? Here, there. Yeah. Yeah, you're going to eat the cow. Oh, yeah, Uncle Ernest would be so happy. He's eating the cow, guys, if you can't help. I don't know how much the noise canceling pulls out or not, but he is on my lap, so it's in close proximity. So I don't know if the software can keep up. But yes, if you are logging in for the first time and you hear, a baby or a little kid voice, that is Kip. It's funny. He's so much louder. I feel like Jin was never this loud when she was on stream, right? Jin did a lot of streaming, but I feel like Jin was definitely not as loud as Kip. But yeah. But he's eating his plastic cow, so Uncle Ernest would be very proud when he gets sent to town. Kip will be sent to Texas eventually here. All right, so euro pound, look for a base. Wouldn't be surprised if it comes through and drops. We do know the 23.6 is sitting there, and there is a basing level right here. So watch out for that on shorts. Again, I'm going to pull this one off. We don't necessarily need that as much. But if we're able to break through the 23.6 level, look for a little bit of a basing and then take a short, bringing it back down to probably here, 85.71, if you're looking to trade this one. But right now, 10 pips of movement, one spike up, one spike down. That level did its best. I mean, look at this. Hit it, grind, hit it, pulled back down, again, supported it, and eventually broke. But, I mean, look at that. 30 minutes, I mean, there's more than 4 hits in here. So plenty of hits, and it's, here, what? What are you doing? Take this. Yeah. So euro pound. So euro pound, we ended up making it through this top level. And again, grind, retest, punch down. And you can see it's having a hard time at 139. Now, I actually thought 139 would hold a little bit better. We did know that it was kind of a weird top with nothing. So it was kind of a new establishment, and it didn't really explode off of it. It kind of was more of like a hiccup with not a real true retest. The level above it was a bit better. I'm almost positive. Did we hit it? Yeah, we did hit it. I thought I drew that one yesterday, but basically this front run area right here, this is what we're looking for. I didn't realize that it hit it. I really thought the 139.25 would give us a little bit more resistance than it did. It didn't. It sliced through, and then it ended up using it. You can see it's basing in it right now. So It is what it is. It ended up grabbing the top one. I did not get into this one, just in fair, in full. Whoops. There we go. It's this that I wanted to grab and bring this up. All right. So now that we're extending that forward, we're going to remove this. We are going to look and talk about a level here, though. Right there. So we don't quite have the Harry Potter trade yet, but what I was looking for is all these greens in here and this push. How much distance is this? It is about 60 pips. How much is that? Ooh, that's 20. Whoa, stop, buddy. Stop. You cannot pull the cord. So I'd really like to get a short in here, but the way that it's grinding down right now, I would say my opinion is it's going to continue just to drop lower, right? Well, you cannot have coffee. I know you want it. If you're drinking coffee, you're going to Uncle Nero's. Here, how about this? There. What is in there? You don't know what that is. Let's see. 1 to 3 is sitting right there. It's close. 69, 70. I'd say there's a short in there. The problem is going to be getting the confirmation on this one. I mean, if you can get something cheap in there, again, we're seeing kind of the euro reverse back again, particularly, versus the, we're seeing it in multiple pairs. Hold on, I'm looking at Nadex real quick. Is there anything that's even remotely attractive? Nope, not my phone. Here. Euro yen. That's about to get stopped. That's There's one for $18 right now, $18, $19. So there's and again, these are few and far between, but there's a 37, right? There's one there, and then the bottom side of it goes down to what? 38.62, right there. Right there's the knockout, which is almost exactly what we have. So again, rather cheap entry on that one. We know that it's got room to run to the downside. About $18 for the risk. Now it's up to 22 because it's somebody's listening and it's starting to accelerate. But there's again 18 for this is what, a $75 one. Risking 20 to make 60 or 75. Not necessarily a horrible base trade, right? What, buddy? 18 for the 75 total on the opposite side. So, what? Get on the floor if you're gonna be like that. Jeez, you little spaz. Get that over there. Here, play with that. He does this like flailing back. I swear he's gonna like hurt himself. he flails back and like cranks his neck back. But all right, so again, decent knockout on that one. If you guys are looking for a trade, as I said, it's a top side ceiling of 139.37, bottom side of 138.62. The risk is back down to 18. So again, 18, and you get 58 in the other direction, right around that. Risking now it's 17.59. So I think it's pretty decent. I wish it was a little bit higher, but again, there's the risk associated with it. It is 1030, but there's nothing over here necessarily buy wise that we have to that I'm looking at. Pound dollar. So pound dollar, this was the trade that we drew yesterday. Again, a slow entry. You can see that it came through and broke down at late last night at 10 o'clock, 11 o'clock. This is the extreme example, right, of the drop base below it and then pull back. So this one spent, I don't know, 5 hours basing before it pulled back. But I mean, there's the trade. It's about 2/3 of the way through. So there's not really much to say about this one. It's on its way. Yeah, it's on its way. Can't really tell you much. It's 2/3 of the way, and it's a little bit too late to get into it right now. But we talked about 1600. I'm sorry, 116 being the big level, and yeah, it's in. And again, this was a European-based pullback. So yeah, it's a decent one. All right. Pound yen. All right, so pound yen. It did reverse yesterday morning, so we were sitting right in here. And we were kind of pushing up, and we talked about the 23.6. There was a level there, a little choppy, and it did. It ended up forcing it back down at 11 o'clock, and then came back up and forced it down. So it's been fighting. It hasn't hit that 1678, and that's really what we're looking for. So a lot of basing in this level, but we'll remove it right now. It's not necessarily important. You can see that bottom target got hit again. Look at that. I'll extend this across. And again, let's make sure that this is flat. That was close. I missed it by just a little bit. There you go. See, we ended up grabbing it again in this level. So, right now for pound yen, I'm still looking for a short at 161.78. We're basically in the same. I mean, yesterday we were sitting right here, so we're 13 pips in 24 hours from where we were yesterday. Again, very sideways base channel, but 161.78, and then again, if we once we break through this level, I think the 160.67 target first for downsides, but again, a break of 160.59, getting that same type of confirmation that we just saw here. Again, not this extreme, but you guys know what the pattern looks like. The break below, the base, the pullback. Again, draw a triangle if you have to. Where is it? You know, if you have to draw a triangle to be like, okay, did it base enough? Go ahead and do it. Okay. In that confirmation. All right. Dollar CAD. So dollar CAD continuing to rise. Our Harry Potter is still good from yesterday, right? This one is still set. We ended up tagging it at what? 11:30. We pulled back to it at 11:30, and then it continued. Totally cool with that one. That just means there's another hit on that level, which means it has the ability to kind of do a bit more. Now, we know we're dealing with this right now, right? We know we have some sellers up in this area, so be very cautious with this one. Right now, again, this is the same combination that we had yesterday. Dollar strength coming in as well as weakness inside of... No, not that, buddy. No, not this. No, that would be a big mess. That'd be a big mess. Here. Big mess. Yeah. Again, looking at gold, oil, it's down $2.57 today, right? It's down $2.31. So dollar CAD is kind of the same thing that we saw yesterday. It is a combination of strong dollar, and again, it's a little bit of a strong dollar, and weak oil. So we are pulling back up to this 132 level. Let's pull this back up. I think there's something at that 132 level. No, it's just those sellers. So yeah, we just marked it off because it was 132 and then 133 up top. So yeah, right now it's hard to be able to get this one short. Right now with, again, locking down, and if you're wondering why is oil up so much, this is probably a direct result of, again, China locking down. I think it's 20 million people. I think that is what I heard this morning. Again, large industrial city. I'm pretty sure it's 20 or 22 million people or something like that. It's the largest one since like Shanghai or whatever. Okay. But it's a big industrial city. So you guys remember all that terminology that we got so used to and we haven't had for a while, right? The excuse for everything, supply chain. Yeah, guess what? Our supply chain is just getting ready to be messed up again. We're going to start hearing it again about supply chains. It's not gone yet, unfortunately. I think the supply chain thing will outlive even the transitory. Remember, I mean, we got transitory fed to us for so long. Feedback hub. How likely would you recommend Windows 10 PC to a friend or colleague? So I think this one continues to move. I think 133 is really look. I'm sure we'll probably base back and forth again, but until we get something on the oil front, I mean, again, we have additional oil being brought on from multiple sources. OPEC Plus is doing it, the Libyan front over there, and at the same time, we have China locking down, which lowers the demand on that side. It's a recipe for oil to continue to go lower. It's at 87.50 again. We were literally just up, back at 97. Talking about $98, it was $97.68, and now magically we're $10 back down again. Again, this is that price stability that we're having some problems with. I think right now it's really, really hard to suddenly say, "Yep, I'm getting short, getting short." At least until we either probably until they lift the lockdown and everything goes back again. That's probably the first pop we're going to see right now. There's just no other fundamental factors out there for it. And unfortunately, the oil market is a very fundamentally driven market. Okay. Dollar Swiss. Now we're seeing this one pop. There was the pushover, and I guess yesterday, late last night, actually. So yesterday we were sitting in here. We talked about this confirmation at 10 o'clock, and we talked about it again. It was out very, very fast. At 11:30, it ended up bouncing off this lower level that we had mentioned yesterday being the profit target area, and it tagged it. If you take the candle before the crunch, you can see that it came down and grabbed that profit level, went all the way back up, based again, and then boom, paid out a second time, and then obviously, this is our second, third, and fourth broke. It did just recently touch. Again, I don't need this as an old level from before. It did just recently touch the 98. Right? So the question is, do we turn and reverse off of this? It is an area, I would say, again, being that it is 10-11, this is the time where reversals would come in. If you guys are looking for something right now, this could be a potential area for us to take short. Now, you may say, well, why? You've mentioned dollar strength on everything else. Why would we have dollar weakness here? The Swiss is not inherently weak, right? Seeing the CPI for this, again, it's increasing at a faster level. They are going to respond with a rate change. Let's see what the manufacturing came in as. 52.8. So remember I said I wouldn't be surprised. I think they said 52.8 or 53. That's better than expected. So again, this is a strong dollar move, right? We just had a strong dollar move news base right into a level. Okay, not that the Swiss is weak, but that's the dollar reaction. So the news emotional response is in. We typically look for a retracement back down again, which would be back lower. So it is kind of set up for that type of a move. What just happened with Nadex? Okay, that Nadex position is still continuing to move because now it's $30 now to sell it versus the 18 that it was before. So you've almost doubled your money on that one. Yeah, so I would expect a reversal on this one as well. Not because of dollar weakness, just because the emotional response is already into the market at this point, and it's not like the Swiss is weak. Their 0.3 was a big deal. They will continue to raise. It's not going to be lost on them. So we're looking to reverse, and this is a level that we talked about yesterday, so you should be familiar with it. Dollar yen. So dollar yen. Thankfully, again, we were able to break through. Again, we talked about 1, 2, and 3. Be cautious with this one. Again, it did Harry Potter and is now going to the top side. And again, this is that pattern we're talking about, right? Up, base, pull back, and then take off, right? By the way, if you want to know what time that it reversed, the low, 5:30. As well as green, red, and then green is right there as it leaves the zone. It's got a little bit more room to run this one, though. I don't know if it's going to get that much through, but maybe. Other way you could have played this one is actually done it off of this base here and said, well, there's our new base, right? Or you could have been a little more conservative and said, there's our new base, and taken our 1 to 3 to there. Right? Right. So, yeah. Not bad. So let me explain to people what I just did on this one. All right, so basically, we knew this was a level, an old violated level. We're looking for the base and looking for the pullback. We know that the Europeans typically send it in one direction. The Europeans started here, sent it straight down again. We're looking for 530s for potential reversals. We're also looking for some type of a confirmation. So you could have established a new level of risk, and I'll just put this in there. You could say, look, there's our level of basing, right? There was our confirmation, right? We came back, and it didn't go any lower. As it leaves, you could get entered in the trade, and that's where this piece came in. You could also say, listen, I'm waiting for a color change because I want confirmation. Okay, there's your green, there's your red pullback that didn't go as far. And I guess there's a green candle in there, but there's your red, there's your green, there's your red, and then there's your green confirming right to the top side. And then there's your 1, 2.5. 2 and 3 is right there. Right, so it looks currently like On 3.6, 3.0 is right there. 3.03. And you can see we just tagged out of that trade. Okay. And my risk is actually a little bit lower than what the zone is. Well, it's even with this guy. So again, a couple different ways that you could have played this one to the top side. As I mentioned yesterday, I think it's very, very hard to get short this position. Again, we are seeing pullbacks, but I think going forward, I think at this point with the dollar rallying as much as it has, I almost feel like tomorrow's non-farm payroll. If we just continue to go up today, I feel like tomorrow we're getting short before the non-farm payroll number. Just because there's so much dollar strength, it's going to come in as a strong number, and everybody and their brother is going to be like, "Oh my God, we got to go long dollar." But if today was a straight up long dollar day, it's going to be a trap for all the retail traders tomorrow. So I feel like at this point, I feel like we're definitely setting up for more of a dollar short tomorrow. So we'll see. Bitcoin obviously continue to go down 1%. You can see it's kind of coming back down to the move, and obviously justifiable so because of the dollar. Ethereum looks the same. Dogecoin looks exactly the same as well. Yeah, look at the dollar. They're looking at that data like, oh my God, this is so good. This is so good. Yeah. So we'll continue to see that move. All right, oil. So oil continued to deteriorate, and like I said, this is one of those geopolitical factors. As you guys know, I'm 95% technical and probably 5% fundamental. Geopolitical events are the one thing in technical trading that you can't account for. China locking down 22 million people and having mandatory, COVID testing. There's nothing you can do about that. Their process was different. But whenever they lock down, it absolutely affects us as well. What are the driving factors for inflation that the Fed is like, oh, it's Russia? No, we're still dealing with factors of supply chains, and we got used to inflation being high because money was cheap, right? When you loan it cheap and you keep interest rates low and there's no fear there, people will spend a lot of money. When there's supply chain, that makes lower supply, which increases demand. When demand is high, it also raises inflation. There's nothing the United States can do except if we decide to manufacture everything, which will never happen. Outside of China, if a country locks down, it locks down, right? If somebody goes to war, they don't televise these things. We don't know when they're going to happen. So locking down is definitely something that will increase it. But again, for oil, locking down 22 million people means that there are people not driving cars, that demand is lower, right? So it is justifiably so going down. We do have a level down here at 86.26 that will be interesting. We are getting ready to run into it. There's been so much destruction. Has the market factored everything in? And the big question is now is, will we see a little bit of kind of a rebuttal back in this one? I mean, U.S. data looks great. U.S. is still using tons of oil, but are they using enough that it counterbalances China having a little bit of a shutdown? The answer is probably no. It's nice to think that, China is insignificant, but the reality is China is absolutely a monstrous player, and that's a lot of people that will not need demand. It's only 4 days, but could it be extended? Sure. So I think there's probably a buying opportunity in oil somewhere down here, and one of the levels we marked off that we have seen buyers step in right here, right? Right here, right? 86.26, and it is a tested level. They have been there before. We are in close proximity, so look to see if we push just a little bit more for a turn and reversal potentially at 10:30. 10:30 could be the low of the morning, and then we push up back into probably this, probably like the 89 level right here. 89 is kind of not only the 23.6 where we could continue the trend to the downside, but you can see there's some basing in here, and there's a little bit of a confirmation right off of that level. Whoops, right there, right. So wouldn't be surprised if we kind of bounce to here and then try to push back lower, okay, until we get some type of a lift. Natural gas. Well, we talked about natural gas going higher. Yesterday's kind of 9:30, 10 o'clock bottom was there, and then we kind of got the test. We're talking about this going higher. Yeah, I don't know if you guys heard, and again, this is kind of in the same realm. California is asking people not to charge their electric cars because they, I guess, are in a heat wave right now. So sorry, Marina. But I think that's funny, right? California, let's go green, right? But by the way, don't charge your electric cars. So yeah. And this is something we've joked about in the past, that it's nice that we're being force fed the electric car thing. Everybody needs to go this way. We're going to do it. We're going to remove the incentives. You got to do this, but we don't have the power grid for it. We can't actually support two things. One, we can't produce the batteries for them because we don't have the rare earth materials, right? And then they put the law in. It says, oh, you're only going to get subsidies if you produce the stuff here with the rare earth metals we have in the United States. Again, we don't have them. China has the grip on that market. They don't want us buying them from China, but we don't have the grid either for the electric stuff. So now they're telling people in California because there's going to probably be brownouts because of the supply. The drama on the power grid. Don't charge your electric cars. So unless we go full solar, right, on these cars, unless they start putting solar panels in there where they can charge themselves, all these electric cars aren't going to work out. And they said that California, I guess, I don't know if it was mandated or what it was, but they said by 2035, I guess it's not outlaw, but I don't know. There has to be more. I think they were talking about outlaw. I was driving, so I didn't get all of it, but I think the mandate is like by 2035 that they won't be buying regular cars anymore. That you can only buy electric or whatever in California. But they said they basically, due to the infrastructure of the power grid, that they may have to actually push that back to like 2040 or something like that. I'm hoping that literally, guys, we can just get solar panel roofs and my car can charge when it's sitting outside. How great would that be? Like if you could drive to work, use like a quarter of your battery, and then when you come out of work because you were parked in the sun, it is now recharged. You're back 100% full, and you had that. That would be incredible. I would absolutely pay double for my car if I never needed to buy gas, right? I just leave it out in the sun, charges itself. I think that would be awesome, right? I mean, obviously for long hauls and stuff like that, that would be a little different, right? But I think that'd be awesome. I would totally pay twice as much. I'd probably pay 3 times as much if I knew I never had to sit in a gas line, right? There's the future, guys. Solar panels on the roof of your car. You pay triple what the cost is. You pay $60,000 for a car, or $70,000 for a car, or $80,000 for a car, depending on what level of car you like. And you never have to stand in the gas line ever. Your car will charge itself at night. Or not, obviously not at night because solar, but during the day when you're not using it. Awesome. Awesome. Love it. Sign me up right now. I'll take it as long as it doesn't look like the Cybertruck. Anything but the Cybertruck, right? Anything but the Cybertruck. I just can't go there. All right, so that's natural gas. I think natural gas continues to pop. Gold obviously continued to deteriorate. We talked about the Harry Potter breaking through 1708 yesterday. There's the push down. There's the pull back up. And you can see we tagged it right there. And we are now past profit at 1700. We're actually down at 1693. I think if it continues to deteriorate, these are strong dollar plays. They are obviously going to continue to crush inflation. Not much else I can tell you about this one. Again, 530 was kind of where 3 o'clock is where it kind of started to push up. At 5:30 was your confirmation trigger. Hopefully you guys got this one. So if you attended yesterday, there you go. Silver, we talked about the same thing as well. Silver, we just talked about it coming down to 1775 was our target. Look at this. It loves 1775. It hit it at balance, and then it's like chop, 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 chop. Median average right there, but it is going lower. So let's see. We can take this down. We can take this down. Now it looks like the 61.8 play is up there, right? Bisecting is there. 23 is at nothing. 23 is at nothing. The 50 has something right here. And this big, this more near-term one, right? You can see now if this is the bottom, the 50 just happens to be a level right there as well. So I'll remove some of the shorter-term ones just so you guys can see it a little bit easier. But this is where we're currently high to low, right? This profit target smashed. 1775. Let's see, where can we go with this one now? All right, we are here. Now this is a 4-hour chart, so we know we got some stuff going on there. Can I see that one on a 2-hour? That would be awesome if I could. Be a lot cooler if you could. I can. Nice. You know, it doesn't really change it that much. It's still the same exact candles. 39 to 29. That's fine. I can make do with that. All right, our new target is 1740. Oh, that sneeze came in an hour. Hopefully I didn't sneeze in your ear. I was covering the thing. Silver shorts, 1740 is what our target's looking for. Another 30-cent drop in that one. Honestly, with non-farm, I think this doesn't get affected as much. Maybe we see dollar weakness in selling, but again, the goal is still going to be there to crush inflation, particularly if the earnings are not there. Yeah. So again, hopefully you guys were able to maintain short. I mentioned yesterday that I think both these are decent. Just you got to maintain those shorts. Gold, obviously, the better of the two, gave us the exact draw that we had. Silver just continued to deteriorate. Our target of 1775 got hit. It heard what we said at 10 o'clock and ran us down and hit us there at midnight. And now we are also continuing to, kind of leveling off at 1775. You can see it's almost like if I put like I bet you actually, let's see. Bet you it's pinched. There you go. Look at the pinch. The pinch is literally almost equidistant, right? Look at this pinch. If I had to do, look at that. I don't know if you can see this or not. So this is funny. The pinch, literally, the 1775. Do you see where the 50 is? Do you see how there's not even a 50? Look at the 50. We're smack in the middle of the pinch, right? How cool is that? So, yeah, very, very funny. So, yeah, look for 1740 in silver. I think we're heading down that direction. Apple, I wanted to see. I can pull Bollinger Bands off right now. I love Bollinger Bands. I just love everything about them. I don't really use them. They're more just kind of, it's something that, I've done presentations in the past, and I just love the idea of them. Like, I love the idea of just adding statistics in, because the market does have so much randomness. But that's like really like the great thing about statistics. Like, yes, statistics acknowledge that randomness happens, right? That there are things out there. There's obviously outliers and everything. There's no way to predict them. The more that you use, eventually things do come back to kind of like an average and things. I just love everything about them. I think they're great. Like when you're talking about standard deviations, when you really dive into it, like the science of it, it's just fascinating, right? I don't use them as trade triggers, right? You guys know what I use, but I just think it's great. Awesome stuff, right? There's your VIX, right? You may say, why isn't the VIX dropping now? Because now everybody's looking at this, and we had the jump up, and it's like, wait a second, hold on. People are not losing their jobs. We got jolts up in the air. Like, holy crap. Are they going to, they're going to continue? Could we get a 0.75? Another 0.75? Holy crap. Which would be a huge jump. All right, huge jump. So that's why the VIX is maintaining its height. And again, that's why we're seeing this. And look at this. The dollar is pulling back, right? Imagine that. Question is, did that dollar Swiss level hold? It did. Look at that. It's about halfway through. There's your dollar Swiss hit, and it's about halfway. It is now sitting right there. So we're almost there. Almost there. All right, about halfway through. All right, so let's look at the indices and see what kind of fun and excitement we would have had today. It's funny. People do this like, oh, look, the 23.6. No, the 23.6 didn't exist yet. The 23.6 level was there, so no, it did not get hit. But it is a level now, so it is one of those ones. It's like, look at that, the 23.6 level. Ascending wicks there. Yeah, that's ascending wicks. We kind of like those areas if we can get back up there. But let's look at 930. So 930 is this candle. No, not really. I would say that I'd say there's a little bit of a zone, but we're kind of smack right here in the middle. We're not really in the zone either direction. And I would say, could we have said, hey, listen, here's your overnight trade right there. When we've already hit it. 930 is kind of opening right here. In all fairness, let's see. Could we have gotten a 1 to 3 on the top side? Let's see. Here's the true determining factor. Could we have gotten the 1 to 3? No. Because there would have been your top side. So the answer is no entry. Answer is no entry. But, I will say we can use that level right now. You can see it was a base, so it was kind of a trigger at 7:45 this morning. So no entry on this one. But now that we're rallying up again, and we're a little bit late for the 10:30-ish mark, but it is a 23.6. There is a level there. It was a level in the past. It is confirmed. It did push it pretty deep, but I will say that there is a level sitting there where if you guys are looking for shorts, there is a potential short coming in right there, right? Let's see. Has there been any headlines that I need to worry about? There you go. Dollar yen breaks above 140. Yep. Ooh, construction spending declined. Okay. Yeah, that 140 is a big deal because remember, the world was going to end at 130. At 130, it was horrible. At 135, the world was going to end. Now we're above 140. So, yeah. I think there could be a Japanese intervention on that one pretty soon. Anyway, so again, not an opening print on this one. Again, we're literally pulling right back to where we opened. The open was right here. We're right below it right now. So if anything, I would say this one is one of those ones having to understand where your targets are. There was a zone there. If you were lazy and only did step 1, 2, and 3, then yes, you probably got stopped out on this one. I mean, yesterday we were, 4 for 4? Even if you were lazy today, oh well, you lost the 1 on that one after yesterday where you were plus 12. So, or plus, I guess it was a plus 9-3 because the 1 was kind of sketchy. But I would say because the 1, the 3 wasn't there, the answer is no. Why is my phone going off? Hold on. What? Sorry, I'm like half panicked that I'm getting a phone call that like one of the boys is like, I need to come home. Reese got teary-eyed when I was dropping him off. He's like, I'm just nervous. I'm like, buddy, there's 13 people in your class. You'll be good. You went to a school with 10 times as people last year. You knew nobody but your brother. This year, you know like 7 or 8 kids at the school. You're gonna see all of them. Hold on. I think that guy sent that to the wrong person. I've talked to that guy twice. Okay, it's not the school. All right. Okay. Phew. I got nervous there. All right. NQ. NQ's 930 is right here. Kind of a similar scenario. I would say drawings at the bottom. It looks almost exactly the same. If you do the same pullback, right? You have the same pullback into there. This one, there was probably some people coming in to sell, right? Actually, there was a zone here. 930 is there. Actually, this one would have had a short. 1, 2, 3, 4. That one had too many, so I don't care about that one. All right, so looks like there was an entry here to the short side, right? Because the 930, pop into the same level, 23.6, because it was a 23.6. So let's see. There's 2, there's 3, there's 3. Bam, out. There's the dark green. So there's 1. So we're 1 for 2 on entries and 1 for 1 for profit targets. So not too shabby. Right? And again, this one was a little bit different. There was a level lower, but the difference between this zone and this zone is this one is 1 touch, right? For a long, technically, right? This is 930. We know there's a level there, right? That could have just been established, but it only has 1 hit. There's your level, right? 1, 1, 1, 1, multiple hits in there, right? And it just barely, I mean, it's just a little pinch past it, so. Okay, 1 and the 23. So a lot more factors on this one. YM. Let's see. So YM. Let's run fibs from here down and see what we got. As of here, right? There's your 745. There's your red bracket. This one I would probably say most likely no entry, even though I know it worked. Just because you can see that this is really only 2 hits off the bottom. So there's your 930 candle. And again, for long, you definitely wouldn't have gone long. Could you have done it short? You could have entered on this one. That's a 10 o'clock one, because once this broke down, if you didn't take it because you're like, listen, there's not an approved. Once it broke, you knew that this is no longer a zone. So I'm going to say that you could have taken this one. I'm not going to add this to the statistics in either direction, because at 930, you can say, listen, this is technically, it's a test, right? It is 23. You're going to have people stepping in. Bottom side, there's only 2 touches. Actually, I guess 3 touches right here. And it was a little bit deeper, but if you said, listen, I'm not easy about this one, there's not a 1 to 3 here, I'm not going to trade it. Once it broke through the bottom, you know that this is no longer a situation. Then you could have actually said, well, wait a second. Okay, so if that's no longer a problem, now the top side has a clear path, and you could have thrown one on here, right? And 1 to 3 is right there. So, I mean, literally you're off in the 1 candle, right? The push up and the push down. So understand that you guys still should have made money off of this one. Not necessarily opening print, but if you were a little bit more concerned and not as confident with this one, this is not one of the ones you would have taken an entry because your profit targets was not the full path. All right. So just keep that on your radar. I should actually probably screenshot this one and use this one as an example of one that you probably would, that most likely, again, more advanced, more comfortable with it, yes, you would have taken it. If you're newer and not as confident with it, then this one should have been one that you didn't, right? Just as an FYI. But you can see that it did go through. And the Russell. The Russell, look at that. God, so close to 1800. 930. No, 930 was over here. We were already breaking through the bottom of the level. So I'd say it was a short. There was never a pullback. And unfortunately, this one was already off to the races. Not much you can do with it because the 930 was over here. So reality is, one, absolutely you should have got into. Two, if you felt more advanced and comfortable, we should have got into. If you entered both those, they were 2 for 2 as far as entries go. ES was definitely not out there. There were zones it was boxed in too much, and Russell never gave us an opportunity. So 2 out of 4 on entries. If you did enter the 2 that you did, and again, you may have only gotten 1 entry. You're 1 for 1. If you did get the 2 out of 4, you were 2 for 2 on those entries and 2 no entries on the morning. So again, opening print was a good day. All right, that's everything for today. Like I said, I think the big things to watch out for the rest of the day in preparation is, look at this. You can see the pullback. The big question will be is, again, you can see it's pulling back. It is officially out now, by the way, guys, off that Harry Potter, right? It's done. You're seeing a pullback in the swish. Let's see. Oh, look at the Swiss is pulling back. The Swiss is pulling back. It did go a bit lower. I think the big question is, man, there's so much dollar strength being smashed into this. If this continues, I think tomorrow, the way to play this, I think that tomorrow, I feel like it's going to be a dollar short scenario tomorrow. Reason why is honestly, just because we're seeing so much dollar strength today, everybody's expecting that the non-farm data is going to be good. If it is good, everyone's going to be like, yep, long dollar, but everybody went long dollar today. So it's really just setting up traps for everybody else, right? It's about setting traps. So yeah. Good stuff. All right, let's go ahead and do the drawing. All right, so giveaways. Got 5 in today, right? I see Debbie. I don't see an Ernest today. Is Uncle Ernest not even here? I even talked about Uncle Ernest, and then he's not even here today. Right? Uncle Ernest is not here. All right. He may be doing cool school stuff today. Hopefully. I don't know. Are they in a heat wave in Texas too? I feel like maybe. Who knows? Rolling brownouts. He's out there trying to charge up his Tesla truck is what it is. He's all angry. All right, I'm going to shut it down. So he loses out on today. So yesterday it was Will. So Will be going, and again, Will's in for 3. Will's going for 100. Everybody else is going for 25 today. And winner of today's drawing is Debbie. Look at that. Go, Debbie. Will's like, this is why I don't do more tickets. Will, you're absolutely doing it right, buddy. You're going to take losses on there. Ask Neuro. Neuro jumped like 5 places. He's absolutely doing it right, though. Right? But it was Debbie. Right? The girl, I mean, you can never discount the girls. I mean, look at this. Look at this. Right? She gets her 25. Look at that. 11 points separates 3rd place. It's getting hot. It's getting hot in there, guys. Getting hot. All right, so big things. Watch out for non-farm payroll. I think that's going to be, again, a big one for tomorrow morning. The way that it's setting up right now, it looks like it's setting up for retail trader traps. That's always a big deal. And overall, the other thing that I'd watch out for is look for some type of news coming out of the BOJ. Again, we know that 130 wasn't great. 135 is where it starts to hurt them a little bit. 140, big psychological level. Don't be surprised if they do some type of intervention and all of a sudden the dollar yen goes boop right to the downside. But in looking at that, look at all your yen-based plays, right? We know right now, look at these all quick. When that comes, it's coming quick. This is getting to an area where we're looking for yen strength coming back in. So we have a 50% retracement at 95.50 in the yen. This one's already starting to push back down again, and you can see, guys, look, we're already it's rolling through that knockout pretty well. It's about halfway through on the other side. So that one's already moving back down again. We're seeing the yen here already starting to get some strength coming back in as people are anticipating it. And we know that this guy is sitting high, breaking that 140. When this one comes, it'll come quick. And they'll try to bring it back down. And this could be a 300 pip mover back into the 137 to 135-ish range. So could be big. All right, with that said, I'm out of here. Thank you for joining me today. I'll catch you guys tomorrow morning. And then again, remember, we have a holiday on Monday, so it won't be on Monday. So tomorrow morning, 9:30 a.m. I'll catch you guys then. If you need anything, shoot me a message on Discord. Congratulations, Debbie, and I'll see you then. Bye.